Okay, guys, this is where we are right now in the market, guys. As you can see, this was where we started here when the market threw down. So we held to this point, and here we are right now, boom. So guys, on no distance time, I'm gonna explain this to us because we are coming to the end of this trade. Okay, we're coming to the end of this trade. So what I'm going to do right now is that I'm going to secure my positions because the market has given weak spike, showing that the selling pressure has started, the buying pressure has started coming in. So because the buying pressure has started coming in, I will think of closing up. I've already informed my group that they should be closing up. Okay, I've already informed them to close crash. Okay, so this is what I saw in GPP USD, but that's by the way. So going back to crash. Okay, so this was where we started, as you guys know, and this spike, and we held till this point right now, which is the current position of the market, and this is what we've made so far, guys. So I'm going to explain to us right now how you can be able to spot this very good and sniper entry in crash 1000, crash 1000. So but before I do that, guys, if you have not subscribed to my channel, guys, subscribe to my channel and hit the like button. If you're looking for a way to catch spikes in the market, you don't want to trade against the spike, guys, this is an opportunity for you. Just pay attention. I'm going to explain each and every step of this trade and how you can also enter the retracement, which was at this point, and how you can also know when to exit your trade. Okay, guys, so this is and more is what I'm going to explain on this video. But before I go ahead to do that, guys, I'm going to secure my profits. Yeah, I'm going to secure my profit. I'm going to secure my profit. It's very, very important. Yes, guys, I'm going to secure my profit because I'm done with the trade. Okay, so let me do that, right, guys? Let me do that. I'm going to do that. I'm off camera. I'll be right back. I'll be right back. Okay, having done that, guys. So in this video now, right, guys, I'm going to take it step by step on how I get this very entry. First of all, guys, what you have to do is you go to your 15-minute time frame. Okay, so when you come to your 15-minute time frame, what are you going to look at for, guys? You're going to look out for the higher highs of the market. Remember, you're looking out for crash. Okay, so you're going to look out for the higher highs of the market as the market started going up, up, up. So the first thing I do is to find the height, the recent high of the market. Okay, the recent swing high. Okay, so once you open your 15-minute time frame, guys, you're looking out for a spike. You're not going to swing trade. You're not going to hold it to whole day. Just looking out for spikes. Okay, so the first thing you have to do is come to your 15-minute time frame as the market is pushing up. As the market is pushing up, look at for the previous swing high. Okay, look at for the previous swing high. The market is pushing up. Look out for the previous swing high, which is this point right now. This was the first previous swing high. This we are seeing at this very point. So what you have to do is bring up your horizontal line, place it on that very spot. So once you place your horizontal line at that very spot, what are you going to look out for? The next you're going to look out for is the psychological level that corresponded with these very higher highs, okay, which is the swing high. Okay, look out for the horizontal, the psychological level that corresponded to it. Okay, so if we're looking out for the psychological level that corresponded to this level, we'll click and hold. Okay, the psychological level that corresponded to it is the 50 level. Okay, 7650. So if you don't know how to get these, guys, you can check out one of my previous videos. I think I made a very good video on how you can be able to spot this very thing and how you can be able to set it up. So just click on done. Okay, click done. Once you click done, we are good to go. Okay, so here we are. So this is what we have. This is what we have. So when the market now comes back to this very point, guys, you are looking out for two things: the previous swing high, and the psychological level. Okay, this is just very simple: the previous swing high and the psychological level. So now, what are you going to do? Pull another horizontal line, place it at the extreme of that very, at the weak of that very swing high, the previous swing high. Place the horizontal line there. So you're going to make your entry in between the first horizontal line, which is your psychological level, and the second horizontal line, which is your resistance. Do you see the two things now? So you are getting your resistance and also your psychological level. So once the market returns in between your resistance and your psychological level, boom, you start to make your entry for a sell. Isn't this very simple, guys? Okay, I'm going to explain it again. Okay, I'm going to explain it again. Let me take it easy, go through it again so that you can be able to understand it very, very well. Guys, if this video is making sense, if it's giving you what you think that you need, if it's I'm telling you, this is what I do. Those of you that have been following me in my Telegram, those of you that have been watching my videos, getting spikes, these are one of the strategies that I use to catch spikes. The massive moves you see us do, okay? Even the current one that we just closed now, this is what I do to get them, okay, guys? This is one of the strategies that I use. So the first thing you do is when you come to your 15-minute time frame, I'm taking my time to explain this, guys. Even though this video might be long, guys, the main purpose is for you to understand and get the point, okay? So when you see the market coming up, the first thing you have to do is to spot out the previous swing high, which is this. Now, when you spot out the previous swing high, pull out your horizontal line. Let me remove all. Pull out your horizontal line and place it at the extreme there. Once you place it at extreme there, click and hold, edit. Look out for the nearest psychological level. Okay, this will take you back to get one of my videos where I teach how to get a psychological level. So the psychological level close to this very point now is 7650. That's the nearest psychological level. Okay, guys. Now click on done. You've gotten the psychological level. What is the next thing you are going to look out for? You're going to look out for the resistance level. And the resistance level, you're going to place the horizontal line at the wick of the candle. At the wick of the candle. Okay? So place it at the wick of the, here is the wick of the candle up here. So let's get another horizontal line. Push forward to the wick of the candle. Yeah. So set it up. We'll set it up. These are the two things that we need. We are done with this strategy, guys. So what are you going to do? You're going to wait for the market. Anytime it comes back in between this channel, guys, sell. This concept is very, very simple. This concept is very, very well explained and self-explanatory, guys. You don't need to pull out much indicators and all that. Once you're looking out for a spike, guys, this is what you're going to do. It's very, very easy, guys. So as it comes back to that very point between the psychological level and the resistance, guys, you start to place your order, applying proper risk management, guys. Whatever you're doing in the market, always remember that you have to apply proper risk management. This is one of the things that you need to put in place. I need to understand very, very well, guys. So having done that, guys, what happens when the market came to that point? Look at it. The market pushed down, okay, and finally push down, coming back to the same level. This must be a very, very massive move, guys. Very, very massive move. Okay, having done that, guys, if we win, we're waiting again. The market comes back up again. Anytime the markets come back to that channel, boom, we sell. And why are we taking our profit? We're taking our profit at the previous swing low. So we took our profit at the previous swing low. We'll go out from the market. Remember, you are not hunting for buy. Rather, you are hunting for spikes, which is sell. This is crash 1000. In crash, we're looking out for sell positions, while in boom we're looking out for buy positions. Okay, so we're looking out for sell positions in crash, we're looking out for buy positions in boom. So these are the two things that we're looking out for. So when the market comes back to that very point again, guys, what happens? Boom, we'll place our entries. 15 candles should be our SL. And what happened next? The current market you are seeing was what happened, guys. So all this analysis was done in 15 minutes. But when you are placing your trade, guys, I advise you go to a 1 minute time frame so that you get a very good view of what I'm talking about. Okay. So the first move was this, the first swing high. Then this was the second one, which will make the market push down. Boom. We waited again, it returned back, boom, we placed and the market pushed down. This was the last one that we just did now. This was the last trade that we took now, guys. So this concept is very, very simple, guys. It's just for you to understand how to apply it, and patiently wait for it to occur. Because if you don't have patience, you're not going to get it correctly. You're not going to get it the way it should be. Okay, so the two things that you need to know is to patiently wait for the market to return your previous swing high, guys. Okay, so this is very very simple. This strategy is the easiest and simplest strategy for catching spikes on crash 1000 and boom 500. Okay guys, boom and crash 500 1000. This is the best strategy to catch spike. So if you are looking out for a good strategy to catch spikes on boom and crash, this is the best boom and crash spike catching strategy. Okay, so this video is just to give you the simplest boom and crash spike strategy. Okay guys, so just study it guys, back test it. Okay, remember, no strategy is 100% accurate. So whatever you are doing, make sure you apply proper risk management. Okay guys, such that if eventually the market comes up, hits you, and didn't make profit, you'll be safe. Your account will be safe the next time you go again. Okay, so if we're taking this also in consideration here, the same thing happened here. The previous swing high, the market came down, go back again, return, push down, go back again, return, push down. So this happens, you can go back and back test it and check it out previously guys. You see the market repeating this same thing often and often guys. Okay, so when are you going to exit your trade? That was one of the promises that I made. Okay, you're going to exit your trade at the previous swing low as the market returns. Because so many of you traders, what you do is when you are in profit, you allow it to keep going. Then when you want to reverse, you keep holding it. It will take all the money you've already made. Okay, so that's not the way forward guys. So this is a very good boom and crash spike strategy. Your take profit should be on the previous swing low. Then your stop loss should be 15 candle above your resistance level. The 15 candle I'm talking about is in 1 minute time frame. The smaller candles. Okay, so let's assume that you made your entry at this very point. So you're going to count 15 candle in 1 minute. Whenever it goes above to 15 candles, exit the trade. The setup has been invalidated. Isn't this simple guys? This is a very simple concept guys. It's price action guys with a little indicator logic guys. So if I'm pulling the indicator logic behind it guys, I'm pulling my indicator, which you guys already know the setup. But if you don't know the setup to this indicator, you can check one of the previous videos. Also, I always review the setup. Okay guys, it's very very simple. RSI with the levels, moving averages, that's all. Okay guys, so what happened? You can see that when the market returned to this very zone, our indicator already read overbought. Okay, so it's not a magic guys, it's not a magic. So once the indicator reads overbought, which is the 1995 level, in between the 90 and 95 level, and you get this up here guys, there's nothing else to that guys. You justify the market. If it didn't go to your direction, you know that that's just nature for you. Okay guys, so guys, I'm going to stop this video here. If there's any question that you do not understand, you can drop it in the comment section. I'm going to explain it and explain it, making sure that each and every one of you out there that is dedicating your time to viewing my channel, you get something to make the market along with us. So I'm going to leave the link for the group below the video guys. If you want to join us in the free group. I'm still dropping each day thread in the free group guys. Like today we have so many of them guys. I drop the signals and we kill it together. Okay, here are some of the signals I also dropped in the free group. Here are some of the signal, and it has been all win guys. It has been all win guys. See you guys in the next video guys. Away.